Hello and welcome to Profiles in Risk. This is your host, Tony Cañas, and today I have with me Adam Meshekow.
Perfect.
Awesome. Chief Growth Officer at Leap. Adam, thank you for joining me today. And we're recording on January 26th, 2022. A month in, I'm still having trouble with that, 2022. You're in New York City, or at least that's what it says on your LinkedIn. Is it 3 feet of snow? Or is it beautiful?
I happen to escape New York. I'm down in Florida at the moment. But
you're down in Florida.
I'm in the 6th borough. But yes,
the 6th bureau. I hadn't heard that, but it makes sense post-COVID, especially. Okay, awesome. So we always give the guests the chance to give the elevator speech. What is Leap?
Yeah, so Leap is an insure. It's really an insurtech, but it really plays at the kind of crossroads of 3 areas. So it sits at the crossroad of insurtech, real estate tech, and fintech. And why do I say that? We're insurtech because the vehicle is insurance that we play in, right? And that's technology. It's prop tech or real estate tech because the application here is real estate, right? Typically multifamily housing, single family housing, and purpose-built student housing. And then fintech, because we do consumer underwriting. We are a consumer underwriting shop. We do underwriting, which is very different than insurance underwriting. It is true credit underwriting. So that's kind of where we play in the fintech space.
Okay, so I'm a renter. I live in Midtown Atlanta, 14-story, a very nice apartment in Midtown. I was a homeowner at some point in my life, but I've been a renter the majority of my professional life. So security deposit, right? Any apartment that I go to. So my big corporate apartment like this one, 30 stories, of course, security deposit. So in my experience, the security deposit side, there was no insurance, right? I just paid my security deposit. Hopefully I got it back, but the landlord had no way to insure that prior to just the last few years. Am I correct in that?
There have been little pieces of types of deposit alternatives over the last few years. But I mean, in general, it didn't really hit the mass audiences until the last 2 years. It's just a better alternative to a hard cash solution.
Okay. So big corporate landlord, like the one that I live for, owns multiple business kind of thing. Multiple buildings kind of thing. So using a solution, using Leap, what does it allow them to do?
So if you think about like security deposits at its core, right? Security deposits at their core are traditionally a bad use of hard capital, right? You pay a security deposit, as you just mentioned, you pay a security deposit in the hopes that you're going to be a good resident and get it back. But let's just say, for instance, you're not a good resident and you default on your lease or you damage the apartment. Typically, when security deposits have to be used, typically they are used either in full or a lot of the security deposit is used. In the case of a default, in fact, the loss to the landlord is significantly more than the deposit on hand. So, it's just an inefficient use of capital that we've kind of seen today. If you think about like multifamily, the real innovation that they've done in the last 20 years, there's been a few things that they've done, the biggest being digital leasing, the second being digital rent payments, like rent payments online. But there really hasn't been a ton of innovation there, right? There's been a huge lack of innovation. So I'll go back to your example. Rather than paying the $1,000 security deposit when you move in, and it's just sitting there earning very little interest, if none at all, the landlord actually has to administer that deposit, put it in escrow, take the costs associated with that, which is about $60 per door, $60 per door, and then return it in whatever the state is mandatory guidelines. You being in Atlanta, landlords actually have to offer an alternative deposit in that city. So legislation is changing where states and municipalities are forcing landlords to offer an alternative deposit or take the deposit in increments versus taking it all up front. And that makes housing more affordable. So an example, again, going back to your example, paying $1,000 deposit if they used or utilized our program at LEAP, rather than paying that $1,000 deposit and literally having no use for that money just sitting in the bank, and hopefully you're a good tenant to get it returned, that you have the capability to pay a monthly installment of an insurance premium, which in this case would be about $10 per month. So they pay $10 per month versus paying the $1,000 upfront.
Is it paid by the landlord or is it paid by the resident who didn't have to pay the security deposit?
Yeah, that's a good question. I mean, there's a few of us out there, right, in our space. Some are B2B focused, some are B2B2C focused. So in most cases, most of us in the space, it's a surety product. Therefore, it is a three-party contract and it is paid for by the resident on the beneficiary of the landlord. But at the same time, there are other products out there, and we play in this space too, where we allow it to be written as a commercial product, where it's a true B2B product, where the resident is not paying for it directly, the landlord is paying for it, even though it is passed to the resident in some way, shape, or form. And we also offer as a surety bond product as well, where it is B2B2C. They're three-party and everyone's kind of involved.
So the insurance nerd in me got super excited at the mention of it being a surety bond, because that is super interesting, because generally surety is you're guaranteeing somebody else will do something, right? So it fits, right? You guys underwrite me. I'm guessing you look at my credit, you look at my employment, right? The landlord traditionally looks up at my employment and looks at my history as a renter, right? If I've been evicted, things like that. But beyond that, I'm guessing they don't underwrite much beyond that, right?
That's correct. Look, I think surety is the reason why it sits in surety bond, and most of the folks in our arena play in that space, is because 20 years ago, when my founder, it really kind of wrote the first policy that existed in this space, they didn't know where to put it. The insurance departments didn't know where to put it. And, they put it in this surety category, which it is, right? It makes sense. It fits the criteria. And, it's your benefit. It's one party's actions or, can control the guarantee of something else. And in this case, it's tenant default, right? Default under the lease agreement, whether that's damage or, skips or not paying the rent, et cetera. But that's kind of where it falls. There's been some innovation on the commercial side, but as we've kind of continued to see this product and space evolve, different landlords want different things, right? They want ease of use. They want the ability to, not it be an operational burden. So there are different ways to implement these type of programs. And depending on how the state and legislation changes those laws on the real estate and rent reform side, will kind of determine how these products evolve in the future.
It makes perfect sense. So I was seeing on the website that, so not only you've got the deposit insurance, but there's also a rent guarantee, basically a commercially commercially co-signing. So how does that side of the product? So that's definitely to a consumer. How does that work?
Yeah, so if you think about it, like everybody pays a security deposit, even if it's low, right? So deposit alternatives, the addressable market is much bigger, right? Because it affects everyone, whether you're approved or conditionally approved, et cetera, when you move into the apartment. But the rent guarantee product, which is kind of where we started, which is true consumer underwriting. That product is typically it's a very similar product, but it's of higher value, right? Because these are higher risk applicants. And let's just talk a little bit about kind of the atmosphere and like the renter pool that's out there. So this product, started off like in most cities, high barrier to entry cities, New York City, right, where the rental criteria is very, very high. You have to make 40 times the rent, for example, in New York City, which is pretty hard to do. And not only that, your guarantor, if you don't make 40 times the rent, has to make 80 times the rent, which, you know, most people in America don't make that type of money. That's just not how it exists. That's why it's a high barrier entry market. So those people get declined. And then we realized on a national standpoint, a large percentage of the next generation of renter is subprime. You know, 40% of the American population age 18 to 34 has a FICO score less than 600. Therefore, their credit would not yield them to live truly where they want to live. So we developed a rent guarantee product, which is totally flexible. The landlord can choose an amount of coverage that's equal to 4 months of rent all the way up to, you know, 12 months of rent, full lease value. And we will underwrite the resident and they will pay a premium. And if they meet our underwriting criteria, which again, we're pretty stringent on that, we want to put people that can pay the rent but need a little extra credit enhancement. We underwrite them, they pay the premium, and they can live really where they want to live. And I can't tell you how many endless calls we've gotten, and you can look at our reviews online. We help people move into a place every single day, to a place that was not attainable without this type of product. And it's a win-win scenario, right? The person gets into the place that they truly want to live, in a home, which is one of the basic needs of human beings. And the landlord has literally an insurance policy that is investment grade, or, you know, AM Best A minus rated, that they can actually go and feel comfortable that if it goes bad, I've got coverage here.
That's fantastic. I love that win-win-win, and how consumer friendly, how consumer friendly that is. So what kind of losses for example, does it cover job loss, for example, which is it's my guess the main reason that people become unable to pay their lease?
Yeah. So we cover really any default on the lease. We do not have, like, you know, in an example that we just dealt with, right? We went from zero, like record low unemployment, to record high unemployment in 1 month in the pandemic. We do not, you know, we made it clear that, you know, job loss is a core functionality of not being able to pay the rent. Therefore, you know, we make it clear that our products will not have a pandemic exclusion. It just will not. It doesn't work for this product. And we cover job loss. It's idiosyncratic risk, right? Things happen. People lose their job. Parents get sick. People have mental health issues, and they move. You know, it happens. We work heavily in student housing. People transfer to a new school. It happens all the time. We manage that. You know, we understand the risk associated with it. We price for it, and we run a fairly good loss business, you know, insurance line. And I think if it's done correctly and priced correctly, and especially on the rent guarantee side, if it's underwritten correctly, which we kind of pride ourselves to do, you can build a very sustainable and valuable insurance business for both the landlord and for the consumer.
Okay. So you do get the product up front, you're paying the premium, you have a unexpected job loss. The landlord is covered for the number of months. So if the coverage, let's say, right, I got 12-month coverage. I got coverage for my whole lease kind of thing. And 3 months in, I lose my job. The landlord's protected. I understand that part. But basically, like the policy will keep me in my home for until the end of that 12 month.
The policy will keep you in your home until the landlord takes possession, right? The landlord's not just going to let someone live there without paying rent, right? That's just how it works.
Yeah.
Typically, if you lose your job, they'll either cut a deal with the landlord or, they won't, and they'll, shut down everything and get evicted. Sometimes they will, sometimes they won't. Sometimes they'll have a balance, they'll file a claim, and maybe they'll move out, and then, when they get possession, we still have a balance. I wouldn't say it so much keeps people in their home more than it covers the landlord, right? It gets people into their home.
Yeah.
But in the case of a default, landlords are not, landlords are in the business to collect rent, right? That's their business. So, most landlords, if you don't pay the rent, you get evicted. That's typically what happens. Or, you can't pay the rent, so you skip. And in that case, we will cover the rent in that case. And,
okay, so it's not eviction protection in case of job loss. It's helps you get in, which you wouldn't have been able to otherwise in a high cost of living city, and it helps you, and the way it helps you get in is because the landlord's protected in case you fail on your lease.
Correct, because you couldn't, like, typically with rent guarantee, you couldn't pass, right? You couldn't qualify.
Yeah,
so we give you
that part.
We give you the credit enhancement, but as far as if you default, you default. Like, you still maintain all of the obligations of the lease agreement.
Okay, yeah, I was having a hard time understanding how it's underwritten. It's so hard to avoid the moral hazard of okay, I got insurance for the whole lease if I'm okay with getting fired tomorrow, right? So
the moral hazard on the resident is pretty, it remains the same, right? Whether if they get evicted, there's a lot of moral hazard, and if because they can't rent again. And if they damage the property, they're still responsible for those damages. Even if we pay, they're still responsible. So we do have the rights to, subrogate, just as if a landlord does. So the moral hazard doesn't exist there. There is moral hazard on the landlord side, as you can imagine, right? Someone skips rent and you got full lease coverage, and they're like, well, I don't have to rush in doing this, right? I'm getting paid. There's moral hazard there, but our policy pretty much limits that pretty significantly to make sure the landlord treats it like every other unit, turns it and relets that unit just like they would every other unit.
Okay. How are the two products distributed?
Yeah, it's a good question. So our products are distributed today through a direct sales team, right? Mostly a B2B2C solution. So that means our clients are the landlords ultimately, right? So our mission of the company is to improve the financial performance of landlords, all while making the renting process more affordable and attainable for residents. So we follow those guidelines, right? We essentially go and sell to landlords, institutional landlords, small landlords, big landlords, et cetera. They allow their residents to opt into this program, right? They come in, they get screened. If they get declined, they can refer them to us and we'll underwrite them. If they want to replace their deposit, they have the choice to use a deposit alternative or pay the deposit. And then we integrate through property management software and things like that. And we essentially get all that data, underwrite it, and bind, in order to use those products. So it's really kind of distributed through the landlord's applications, but it comes to us in some way, shape, or form.
Okay, so it's not sold by agents.
Today it is not sold by agents, although I will tell you we have new products coming out that will be sold by agents across the country.
Awesome, fantastic. I love how it is insurance applied to solve a real problem, and you were telling me just before we started recording how seamless that technology is, how it's a tech first product, not the messy application process, et cetera, of traditional insurance?
Yeah, I mean, all of our underwriting, I focus on three things, right? Automation, innovation, and scalability. Automation, especially in consumer underwriting, especially with open banking and other verification methods, there are easy ways to verify identity, verify income, and verify credit, right? All of that's done immediately. We have a score on that person almost immediately before an underwriter even looks at anything. So we know who's approved and who's not approved. I would say we try to keep our touch points as low as possible, right? And I think we've done that through a series of automation. I would say we use, many different fields or attributes to do underwriting today, but we try to use technology to drive that, whether that's, integrations with Plaid and open banking software, verifications of identity, pulling data from property management software, things like that to kind of fully automate the process. And that's what we focus on. So, unlike a traditional, these are pretty big credit risks. Like in some cases, a New York $5,000 apartment, with 10 months of coverage, it's $50,000 of risk, right? So there, it's not small, tiny risk. Some of these are big risk kind of opportunities, but we try to use technology to really drive that. I will say also, we play very heavily in the student housing space. And if you think about kind of what I've been saying, students by nature have no credit, have no income. So they don't qualify to live in these apartments. And students are living in very high-end luxury, purpose-built student housing. I've got an apartment probably right down the street from you in Midtown that is a purpose-built student housing, complex. Very expensive rent, and that's an example. That product didn't exist 10 years ago when we were in school or when I was in school, and we look at it two ways. One, the student doesn't qualify, so they rely on the parent to guarantee their lease or act as a guarantor. And a lot of students don't have that, right? A lot of students, these are first generation students, college students. They don't have a parent that can co-sign their lease, or they may be an international student where they don't have anyone to co-sign their lease. So we do this across, about 700,000 beds, student housing beds or bedrooms across every major university in the country.
That's fantastic. I was a foreign student originally from Costa Rica, so I've been there definitely, and I was very lucky. I lived dorms and fraternity my whole time in college, and then at graduation, I worked in Des Moines, Iowa, so incredibly cheap rent. So my entry-level salary had no trouble qualifying me for a $525 a month apartment. But friends in Chicago, friends in New York, right? Friends that ended up in big cities, they didn't have cosigners.
And it's hard, right? The international students, in New York, it's very hard. It's kind of become a standard practice. Same thing for student housing. I think we're becoming, relieving that barrier to entry. There are so many students today that, are first generation college students, that are going, maybe on scholarship or financial aid. And even though they may want to live off campus in these nice apartment buildings with their friends, they know they can't qualify. So they end up living in the dorm because that's really the only option. And I think that's something that we provide right now. It's not the only option. They have the ability to live really where they want. And that's really what we focus on, because we're a big believer in kind of making housing attainable for all if we can.
Perfect. Last question, just because you have it listed on your LinkedIn profile as we record that you're hiring multiple roles. Are you hiring insurance people? Are you hiring salespeople? Are you hiring engineers? What is it that you guys are really hiring right now?
Yeah, I mean, I'd say all of the above, right? We're growing, we're fast growing prop tech, insure tech company, right? So we're always looking for great talent to come on board. I'd say we're in hiring from all different kind of forms of that arena. We're hiring engineers to, again, innovate, integrate, and scale. I think we are hiring insurance folks, whether that be claims origination, product origination, things like that. We're hiring salespeople to, grow our distribution, both, across multiple different verticals. And, I think we'll continue to do that as we scale. I mean, if you look at this product penetration, it is fairly low. I would say that the product penetration of this product set is probably about 15 or 20% of the TAM. So there's still 80% left for the folks that are going after that type of product.
Okay, so it's exciting. Just a couple of days ago, it was a friend who went to an insurtech from a traditional carrier, posted on Twitter and then LinkedIn, and it kind of went viral. His thoughts on having gone to an insurtech, and the number one, the first thing he says is look for a space that has tailwinds for the next 3 to 5 years. And as you're saying, penetration is only 15-20% in the market. That's what I'm hearing is yeah, there's a ton of growth potential for this product. So very cool, very cool. Adam, thank you for joining me today. It's been very interesting. I knew nothing about deposit insurance and rent guarantee insurance. So very interesting to learn. Thank you very much.
No, thank you for having me, and look forward to maybe joining again when we launch a new product.
Oh yes. Definitely. Once you've launched the agent's distributed product, absolutely would love to have you back. Thank you.
Cool. Thank you so much.